BNB faced renewed selling pressure after failing to sustain momentum above the $675 resistance level. This rejection triggered a downward move, with the asset trading at $663 as of the latest session. The failure to hold above $675 led to a breakdown in buyer confidence and accelerated the downtrend. Sellers regained control after the asset weakened intraday, and the market saw a restart of selling pressure in broader crypto markets. Traders are now watching closely as BNB tests the $660 support region, which could determine whether stabilization is possible in the short term. The move below $675 is significant because it represents a key psychological and technical threshold. In historical cycles, BNB corrections have often exceeded 70%, but those same cycles have also delivered strong recovery rallies. The current decline of roughly 2.4% in the last 24 hours suggests a moderate correction rather than a panic-driven liquidation. This is supported by the vol/MKT cap ratio, which remains moderate, indicating controlled selling pressure rather than forced unwinding of leveraged positions. Funding rates in derivatives markets have normalized after leveraged positions cooled, reducing speculative pressure across the market. This normalization suggests that traders are becoming more cautious and that aggressive shorting or longing is less prevalent. However, this does not eliminate the risk of further downward movement if BNB. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Fails to hold above $660. Technical traders are now closely monitoring this level as a potential pivot point. The market capitalization of BNB remains above $89 billion, which is a positive sign for long-term holders. Even amid the recent correction, the asset is still maintaining a relatively stable position within the broader market. Volume has also remained solid at around $1.58 billion in the most recent slowdown, suggesting that the selling is not entirely driven by panic or forced liquidations. Buyers attempted stabilization efforts after the price dipped below $675, but the recovery strength has been limited. This suggests that the current support levels are being tested, and the market is waiting for a clear direction. If BNB can successfully defend the $660 region, it may open the door for a return to the $675 resistance level. However, another breakdown could expose the asset to further downside testing in the coming sessions. Long-term analysts are focusing on the broader cycle structure and derivatives positioning to assess potential recovery paths. The current correction may be part of a larger cycle that could lead to a stronger rally in the future. While the short-term outlook remains uncertain, the historical pattern suggests that BNB could return to long-term targets if the current support levels hold. Traders are now watching for signs of stabilization in the $660 region, which could signal a potential rebound. If BNB fails to hold this level, it may trigger further selling pressure and test lower support levels. The next signal to watch will be whether BNB can stabilize and show signs of a recovery rally. Until then, the market remains in a state of uncertainty, with traders closely monitoring both price action and volume developments. The stakes are high for holders and traders alike, as the outcome of this support test could determine the direction of the asset in the coming weeks. A successful stabilization could reignite buyer interest and signal the start of a. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. New upward phase. On the other hand, a breakdown could lead to renewed volatility and a deeper correction. The mechanism at play here involves the interplay between technical support levels and market sentiment. If buyers step in to defend $660, it could signal renewed confidence and potentially reverse the downward trend. However, if sellers continue to dominate, the asset could face renewed pressure toward lower levels. The next signal will likely come in the form of a decisive move either above or below the $660 support. Until then, the market remains in a waiting game, with traders and analysts closely watching for any sign of a shift in momentum.